Gold prices seeing a big move higher. Recall gold's been just kind of on the sidelines as we've seen U.S. and China trade talks sort of back and forth recently. Gold was unaffected. We see treasury yields being pushed down to the lows. We're seeing equities making new lows, rallying, making new lows again. Gold just was sort of a spectator during all this until we got to the point where, wait a minute, speculators decided it's time to get back in. And maybe it's because treasuries became too rich, maybe because the uncertainty of the equity markets became too great, but ultimately we've seen a real U-turn in gold sentiment and the momentum pushing gold back up to 1,300 for the first time since the middle of April. Recall treasuries have been on a pretty straight move higher since that time, and equities have seen back and forth trade alike. But I think ultimately gold has been waiting. Maybe the value, the fact that treasuries are yielding instrument and gold is not, perhaps there was value. The dollar trade may have affected the gold trade. There may have just been a lack of interest in the gold trade, and I think it came back very quickly recently, and that is going to propel us. We need to see a trade north of 1307. We get that trade north of 1307, it should propel us to 1320. However, gold is a very fickle commodity, very emotional, and sometimes you get these knee-jerk moves that are very short-lived. So it'll be interesting to see how long we can stay at or near 1300 without any kind of substantial pullback. And as long as equities remain very highly volatile, and as long as the U.S. and China continue to sort of play games in the headlines and throw tariffs around, I think that gold prices will outperform. They have been a lagging asset class in this entire U.S.-China trade deal over the last several weeks, and I think that ultimately gold prices have some catching up to do, so look out.
Check out businessfirstam.com to find out where to see our entire show, and don't forget to like, follow, and share Business First AM.